Hi, Kimball. Thanks so much for joining us today. In last month's video, we briefly touched on the topic of the elections, but a lot has transpired since then, particularly when it comes to the United States. Given the latest turn of events, we thought it made sense to check in with you, and we'd love to hear if you're doing anything different with the strategies.
There has been obviously a ton of news flow around the elections, both here and then abroad. We have not really changed how we're approaching our investment philosophy or the way that we implement it. And the reason for that is that the political risks are sort of embedded in the premise that we have, which is that the future is sort of inherently uncertain. And that you don't necessarily know what is going to transpire that's going to cause a problem, but you need to prepare for a problem before it emerges. And so we're very focused on the quality of the businesses that we own. We do not want them to be dependent on regulatory or governmental largesse in a political context. But we are also very diversified within the portfolio. We have companies that operate in many different jurisdictions, many different industries, and so it's unlikely that whatever the outcome, that there'll be too much damage wrought to the portfolio. There's always sort of an extreme case that people talk about, which I don't think is unlikely, where political risks sort of manifest or they metastasize into more systemic risks, and that maybe that's a contested election, or maybe that's political violence of one form or another. That's part of the reason that we have a weighting in gold within the strategy as a potential hedge against sort of these X factors that may happen. One of the other features of the market currently is that, which is a good thing, although most people don't like it, but and that is that volatility has ticked up a little bit. It's still quite low by historic standards, but it's higher than it was before the assassination attempt. And if you're in our shoes and you sort of know the companies that you want to buy and you know what you want to pay for those companies, having some volatility is good because it just increases the odds that you're going to be able to buy a company that you like at a price that you like. So no change on the strategy. The strategy's sort of been designed to sort of accommodate uncertainties like political risk. And the volatility, even though it's lower than you'd expect it to be, is still helping.
And what is the potential impact of party control on a sector level?
Yeah, there's a lot of discussion around this, but there's also, I would think, a reason to be sort of less certain than one can predict, given a party winning, that a given sector is going to be a beneficiary of it. The political system is a very complex system that adapts to its circumstances, and so are the equity markets or the capital markets. And the combination of those two make it even more complicated and even less likely that you're going to have an outcome that you expect. We've seen that time and time again. I mean, energy, for example, was a big topic in the last election. And the party that won, the Biden-Harris administration, was very clear about supporting companies related to the energy transition and also limiting the amount of fossil fuel use, hydrocarbon use. And you would have expected the stocks of green energy companies to do pretty well, and the stocks of traditional energy companies to do pretty badly, but the opposite happened. And this is one of these cases where there are a lot of different reasons that you could point to, but one of them was probably that the increased regulatory regime and rules prevented drilling, which in many parts of the country, which probably kept oil prices higher, which helped the profitability of traditional fuel companies. So it's very difficult to predict how these things sort of unfold, even if you might have an industry that's sort of associated with one party's treating it well or not. It's just difficult to predict. So we don't try to do that.
Well, thank you so much for this catch up. As always, it was great to see you.
Likewise, thank you.